Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, August 11th, 2017. So stocks hit fresh record highs, but then sharply pulled back on various geopolitical concerns. We'll look at major ETFs, we'll look at some of the sectors, XLF, XLP, utilities, biotech, and semiconductors, and a bunch of foreign equity funds. Junk bonds kind of looking toppy. We'll look at them in a little more detail. While the investment grade outperformed stocks this past couple of weeks, dollar is still having trouble finding footing, and this is helping gold, but it is entering a potential resistance. And we'll look at copper, and I'll show a recent trade we did at MasterCharts Trading for JJC. And we'll also look at oil and natural gas. Okay, so let's look at S&P 500 ETF SPY. So this looks like a genuine rejection candle, very sharp and stiff rejection. Lots of sellers basically came in here. So this looks like a real shooting star candlestick because we had a rejection and then follow through to the downside. Now, keeping the eye on a bigger picture, I can tell you that we're definitely still in a bull market and there was no reversal just yet. Potentially short term, we may get more volatility, especially since August and September are relatively weak month for stocks. Got a really good feedback here. Thank you very much. I'm not gonna say who it is, obviously, but one of the subscribers gave me this feedback, and it kind of feels good sometimes to get this kind of feedback, especially from new traders who are just starting out and have no idea. And this is important. For example, he's saying it's easy for beginners to get carried away with all the talk that's going on. Let me make a comment about that. I do not watch the news at all. I occasionally, I read the news briefly, throughout the day, but I completely ignore TV. I actually don't have channels, financial channels or anything of that nature. So I don't watch the news, but I do watch the charts, obviously. And the charts will tell me pretty much everything I wanted to know. And I'm looking at this one candle here, and this is not looking great. But at the same time, it could still be negated, because maybe tomorrow or day after, they will finally, come to their senses and stop talking about war, and maybe we'll see a gap up to fresh all-time highs. On a weekly time frame, this is not a great candlestick, honestly, and looks like a reversal kind of candlestick for S&P. But we had similar candlesticks before, for example, here in September of last year, and then we continued to fresh highs. So for now, I'm treating this as a normal orderly pullback. Dow Jones Industrial Average, the strongest of the four major ones, also similar thing, a rejection like candle and then follow through to the downside. Again, I wouldn't necessarily push the panic button just yet. Me personally, I have a position in Dow Jones and I'm still keeping it open for now. QQQ, Nasdaq 100, this one started correcting a little bit earlier than S&P. You can see that S&P was kind of consolidating flatly, made fresh high. QQQ was already under pressure end of July. Now fell below the 50-day moving average on Thursday. So overall, again, still a bullish chart, and we actually still have a position open in QQQ. Weekly time frame, now we have 3 consecutive red candlesticks and they are not looking good, honestly. But we had, for example, here back in 2016 also 3 consecutive red candlesticks, and again then we just turned around and made fresh highs. So for new traders, I would still discourage them from shorting unless you know exactly what you're doing. And this is a bullish chart. I would not short it. Here's a definitely oversold chart, and this is IWM as it fell from all-time highs to below 50-day moving average, almost the 200-day moving average. So very sharp move down, definitely oversold. I think we are going to see a bounce very shortly. Okay, let's look at some of the sector ETFs. Here's XLF. This is a record high, all-time record high, even exceeding the financial crisis, pre-financial crisis one. So this is a bullish chart again, and as a result I would look for buying opportunity, not shorting opportunities. Here's one that we took the trade for XLP. Now it was a, from all-time highs we had a relatively strong pullback. In fact, this pullback took out the stops from below previous swings, but then we rallied. So again, I would not short, I would go only long. I would look for buying opportunities, and we have a position open right now in XLP. Same goes for utilities. This looked like a double top, and many people say, oh my god, this is a double top, we should just get out. Yeah, definitely big pullback, a gap below 50-day moving average here, but then we found support and gapped up right there. So, and now we made fresh all-time highs. So this is another example of why I would not want to short this chart that's at all-time highs. Okay, let's look at some of the industry groups. SMH, this is semiconductors. Doesn't look too bad. This looks like a pretty good chart. I mean, we're very close to all-time highs. Relatively speaking, this is SCTR for SMH. We're in a very good shape. We're at 83, so the risk appetite I think is pretty good, since this is a relatively risky ETF. So again, I would be looking to buy it. Another one that I'll be looking to buy is biotech. 52-week highs, sharp pullback, sure, but maybe we're already bottoming. I mean, this looks like a very nice bullish candle here on Friday. Now let's look at some of the foreign equity, emerging markets, EAM, diversified emerging markets. Although they're not that diversified, they're skewed towards China mostly. But nevertheless, very widely traded, 53 million shares traded just on Friday. Multi-year highs, now a pullback. I think we may see a bounce very soon. Again, I think this is a bullish chart. FXI, this is large cap China, same thing. I think, are this 52-week highs? This has to be 52-week highs. Yeah, 52-week highs, and now a pullback. So again, I would be looking to buy this one. Japan, same thing. I think these are also 52-week highs, right? Let me double check. Yeah, 52-week highs, now a pullback from 52-week highs. Normal orderly pullback for now. Well, with a gap down actually. So I would be looking to buy this one as well. And finally, Europe, VGK, these are multi-year highs and also a pullback, a shallow pullback for now, but I think, again, this is a bullish chart, so I would only be looking to buy. So to summarize, stocks are bullish. Yes, we have some wild talk going on, and this is confusing many of the beginners. So my advice is find the remote control and turn off the TV, especially the financial channels, and just learn to read the charts. It's easier. Okay, let's move on to bonds of all kinds. So here is junk bonds first of all. Now junk bonds kind of corrected relatively strongly. You know, junk bonds don't move as much as stocks, but nevertheless they do move, and we had a relatively strong sell-off with a couple of gaps. Here's a gap right there. You can see it more clearly here. Well, it's a partial gap, and another, well, more or less partial gap. So right now it is looking oversold. Junk bonds correlate highly to the stock market. I keep pointing this one out. So I think whatever junk bonds will do, stocks will do the same, and vice versa. Well, to a degree. Here is the junk bonds on the weekly time frame, and this chart concerns me a little bit more than it used to, because now we're seeing a potential tap-in pattern. So notice this, maybe dodgy shooting star candlestick here with a definite confirmation of follow through next week to the downside. So this is not a great sign. Now, did we have a similar pattern before? Well, here's one shooting star, but the follow through was relatively small. Actually, I don't see anything of that nature within the past 3 years or so. So let me zoom in a little bit on the current picture, and I'll show you what I mean. So here's this last week's candlesticks. Looks like a dodgy shooting star with a big red follow through next, or this week rather. So overall this pattern is looking toppy. For example, here was also a shooting star, but the next week afterwards, in June, there was no follow-through, and we continued higher. This is, again, looking worse than I've seen before for the past few years. Is it definitely tapping? I have no idea. We will see how the picture unfolds, but I will be keeping a very close eye on this. So if you're one of the subscribers, you definitely will be getting a update on daily basis about this. TLT, this is a relatively defensive fund. This is Treasuries. Well, actually, this is as defensive as it gets. Notice lots of hollow black candlesticks. This is signifying buying pressure, and 2017 highs are very close, and notice we've been kind of pushing higher and higher. In fact, let me show you on a relative chart. So we have S&P 500 divided by TLT. Notice that for the past couple of weeks, bonds outperformed. Bonds are on the, they were dividing by TLT. So if we bonds are outperforming the past couple of weeks. For example, here stocks were outperforming in the beginning of 2017. So if bonds continue to outperform, this means that money is rotating out of stocks into bonds. Here's bonds TLT on a weekly time frame. Now we had this bearish engulfing pattern, but that was it. It didn't go any further, and now we're kind of rising. So you can argue that this is a rising wedge, and if we break this rising wedge, then we'll continue lower. You can also argue that this is a continuation of the move higher from the late 2016. In fact, I think that this week's candle, let me zoom in on it again, is very strong. Notice that the close was next to the high on Friday. There is a buying shadow at the bottom, and this is a hollow candlestick. This is a very strong candlestick. I think this bearish engulfing from June most likely has been negated, and we will continue to fresh 2017 highs. Now, if bonds continue higher, most likely stocks will come under further pressure. Let's briefly touch upon the US dollar Forex universe. US dollar has been under pressure for, well, basically since March. A couple of support breaks here, and they follow through to the downside. Now we are attempting to bottom, and I thought that this was it. I thought we were bottomed, but so far maybe not. So on a weekly time frame, I thought this was a hammer candlestick from last week. So far, this hammer candlestick has not been confirmed, and we have another bearish looking candle. Now there's quite a bit of support here at around 91.80 at 92. So even if we go below 91, sometimes this is a market maker maneuver, and they will push the prices below the obvious support level, only to rally, again in a very short term. So I will be watching this level 91.88 very carefully if you trade US dollar. Euro is looking overextended. It had a very strong move since the beginning of 2017, basically non-stop gains for the most of the year, and most importantly, we closed above previous resistance highs, and we hit 52-week highs. So in my book, euro is now bullish, but I wouldn't be buying up here. I would be looking for a, well, at the very least, a shallow pullback. I don't trade currencies. So let's look at gold next, and how euro and how dollar is affecting the movement in gold. Okay, so let's look at gold. Here's gold on a weekly time frame first. Notice this. We're approaching $1,300 area for gold, and previously we had two, well, for lack of a better term, I can say that these were rejections here. Especially the previous one was pretty obvious looking rejection. Now we're approaching this again, the same area, and this is looking pretty bullish. Last week's candle was pretty bullish. So especially if we gap up above the resistance, for example, if Monday we open above the previous highs, this would be a very hopeful sign, and most likely we will take out 52-week highs if that happens. If we don't gap up, then we'll see where it goes. But in general, I think gold is bullish. Here's GLD on a daily time frame, and I wanted to reiterate this resistance. The resistance was formed initially by a gap down, a attempted rally that was stopped short at the gap, big collapse in gold, and then a wave-like rise. So now we have basically things happen in this about $123, $124 area for GLD. So we had a thing which is called the gap down, a thing which is called the rejection here, another two rejections, and now we're attempting a third one. So if again we see a gap, especially if we see a gap up above previous highs, it will be a very hopeful sign. Here's GDX, and on this chart, especially what I wanted to point out is the fact that we are closing above the 50 and the 200-day moving averages. The 50-day is approaching 200, and even if GDX stays around 23, most likely we will get a bullish cross. So trend following systems then will start buying this security. I think the most important to me on this particular chart at this particular time is the fact that we have fresh 52-week highs appearing within the index, and this is the first time in, well, let's go back 11 months. When was the last time we saw fresh highs? even more than 12 months ago. So this is more than 11 months ago. So this is a good sign. That means that some of the stocks within the index are hitting 52-week highs. Here's GDX on the weekly time frame. I think the similar resistance to GLD for GDX lies maybe around 24.25 area, probably around 25.70. So it has still some work to do, I guess. And here's GDX on the daily time frame, again with a couple of my proprietary indicators. We're currently very slightly oversold. Notice that this indicator ITBM is in the red. That means that we're slightly oversold. And if you believe, like myself, that this is a bullish security, then you want to be buying when it is oversold. Okay, let's continue with some of the other commodities we trade at MasterCharts Trading. So here's one that we do trade. I'm not a big fan of trading commodities. There's so many of them. You know, there's corn, copper, oil, natural gas, all kinds of soft commodities like wheat, etc. I'm not a big fan of trading every single one of them, but occasionally I see a good-looking chart pattern, so we will open a position every so often. So copper, I think, was bullish since 2016 breakout here in November of 2016. So from about this point on, I started treating copper as bullish, and I would be looking to buy. This week we hit fresh 52-week highs, and we actually did this for the past 3 weeks. So this is, again, proving my point that this is a bullish chart. So here's a trade that we did at MasterCharts Trading. This position is actually still open. I didn't open it myself. So notice that if I don't open a position myself, I would write I have no positions. And the reason being is that I don't open every single position because I just simply don't have the cash, because there's so many opportunities, so my money is tied up in other trades. Anyways, alert was sent out on May 12th. Notice that the position went almost immediately in our favor, but there were some give back. So that is why I prefer to give relatively wide stops, and my stops are relatively wide versus some of the other traders. But this was adjusted for by position size. So then we have first target, it meandered sideways, but then we had a gap up, and notice that we gapped through the second target. So even if you wanted to trade, and take some profits at second target, you couldn't have. You would have gotten even a better price. And then we had a third target also just a few days later, and fresh 52-week highs, and we're still trailing this position. All right, let's move on to oil. Briefly, oil I think is still in a bear market, unless something drastic happens, which is possible, but don't know if it's likely. Anyways, I still think that this is a bearish security, so I'm only looking to short it. Here's oil on a daily time frame, and I wanted to point out this triangle consolidation here, where we have this big red candlestick from June, and within it we have two more candlesticks. So it's like 2 inside days in a row, or triangle consolidation. So after this big move, I thought, looks like a triangle consolidation, and if we break it to the downside, we will continue strongly lower. Notice that the exact opposite happened. And again, in this business of trading, you have to be extremely flexible and keep an open mind. You cannot get married to your position, and you cannot get married to your idea. Sometimes it will just punch you in the face, basically. So be flexible. Anyways, so big rally from the low around 42. Definitely overbought, but I don't see a lot of selling just yet. I mean, Thursday's candle looked very hopeful for bears, but then on Friday noticed that we kind of came down exactly to the pivot point and formed, and then rallied by the end of the day and formed a hammer-like candlestick. So this is not a bearish candle, and I'm still looking to enter on the short side, but I just don't see enough bearishness out there. XLE, on the other hand, the energy ETF, notice that we had a very feeble bounce from July lows into July highs, and then we just sold off. And the 52-week lows are very close. So I wonder, maybe when 52-week lows for XLE happen, maybe finally oil will follow. So here it is, XLE on a weekly time frame in the upper part here, and oil graphed in the lower part. Notice that we're approaching 52-week lows, and back here in 2015 we also approached 52-week lows, hit 52-week lows, and then both of them just collapsed, oil and energy. So I wonder if something similar is about to happen. Okay, let's look at natural gas. Natural gas surged this week really strongly, and that's a good sign, because if we got to about $2.64 or $2.60, we would have been at 52-week lows. On the weekly time frame, or rather about $2.50 or so, maybe that would be 52-week lows. On the weekly time frame, this looks like a bullish engulfing, unconfirmed for now. But I am treating natural gas as a bullish security, so I would be buying it basically. I would not be shorting it. Okay, that's it for this week's recap. Please do hit the like button. I'm not making any money off of this video basically, but if you hit the like button, then maybe more people will get to watch these videos in the future. If you have any comments, questions, please send them in or comment below the video, and of course share this video and post with others who might benefit. Thanks a lot for watching, and have another great trading week. Bye. So I wanted to show you how to find us on the internet. Please go to MasterChartsTrading.com. We do have a trade alert services which are live right now, so please consider signing up for the service. It's only $24.95 per month. Also, if you sign up for our mailing list, you get a discounted membership. You get to see what I'm buying and selling, and which funds I'm looking at, potential buys, sells, etc. There's quite a bit of members-only content once you log in. There's a lot of information about risk control, which is actually extremely important for traders, because the preservation of capital is really one of the paramount to the successes in trading. There's quite a bit of psychology of videos, psychology of trading videos in the members only section as well. Also, I'm going to be starting a Dividend Aristocrats service. For now, it's free for the members that are logged in, that are already paying members, so that's another benefit to signing up soon. The blog section shows the previous posts and market videos, of course. Also, I've added a new section here, which is FAQs, and I do get quite a bit of questions about various, ideas and questions about the market. So if you do have a question, please don't hesitate to send it in. Send it here, and I'll be hopefully I'll be able to answer it for you. All right, thanks for watching, and please consider signing up for the trade alert services. Bye-bye.